Welcome to everyone who's joining us on YouTube and in the room. My name is Mike Hamilton for Trade the Easy Way, and I'm just going to give you a very short presentation, take a quick look at where the main indices are going, and then go into the premium session. So this new format is going to be 20 minutes, 15-20 minutes long, just for the initial overview, and then I'm going to go into the premium session and look at all of my scans. I'm going to start to reveal my trading plan and all the major UK and US stocks that I'm interested in. A lot to do today. So just a reminder before we kick off what I'm looking at here. I'm bearish this market, despite the fact this market is holding up at the moment, and some of my Ftse shorts worked but didn't get follow through. I am looking for this market to have a decent correction this time, sometime this year. So these are some of the fundamental reasons. Stagflation for the UK more so than the US. I don't think energy is not going back to 2022 levels. I know some people are very bearish on the oil. So we talk about oil. I did take a, they pulled the plug on it in the last 2 hours of last Friday. Putin, I mean, the war in Ukraine is not going away. Russia will dig in. Putin will carry on. That's what the Russians do. We've seen that in Syria, Afghan, etc., etc. The US do it. US did it in Vietnam and so on. UK digs in. Ireland was dragged out for way too many years. This is the way wars go. Political stability, instability in the UK. We've got a degree of stability at the moment, but has been very unstable last year. And the main thing is the earnings decline. I'm looking for, as we get into the second half of this year, looking for the earnings decline. Okay, let's come out of that. So quick look at the charts. And at the moment, I'm still buying this. What my common theme at the moment is to buy dips in the US and sell highs in the Ftse. The Ftse's held up on the back of, I think the Ftse's been sustainable on the basis that the banks and the big oil companies that load up the Ftse have done well, and they've kept the Ftse up high. In the meantime, we're seeing increasingly seeing some job losses where UK is strike-ridden. There's all sorts of, it's a perfect storm. So let's just stick to the technicals now. And that's enough of fundamentals, to stick to the technicals. We've hit a lot of resistance up here in these S&Ps. And the S&Ps have bumped into 50% of last year's move. And last year we came down from here in late August until we turned around in October. A lot of FOMO going on at the moment, fear of missing out, because we've had a big 1, 2, 3 wave correction in all of these markets, including the Ftse and the US. If these markets, particularly the US, can pierce through this 4100, then I think we're going to see 4300 pretty quick. We are divergent. The histogram and the MACD is lower. The moving averages are looking threatening, as if they might cross. And the volume has been good up until that Friday. But I'm expecting that to still expecting these pullbacks to get bought and this to get through. However, that lower close underneath the 50% does put this whole thing in jeopardy. If we don't close back above this 4100, I think by at least tomorrow, absolute latest, then this could just be in the process of rolling over. It's not unusual to pull right back this time of year anyway. Yeah, we've come out of it, we had a strong move out of the gates in January this year without very shallow pullbacks. So I wouldn't be surprised to see this at least pull back into 4,000 would make complete sense. Let's have a quick look at the US, so the Ftse. Let's get rid of that mess. So the Ftse is pulling back at the moment off of that resistance. So we're holding, got this huge trend line coming in, formed from this October bounce and this late December rise. There's the, so we pushed up in January, the first half of January, held in the second half of January into the change of the month. And only now are we looking frail. The MACD histogram has not been significantly over the midline. In fact, we only just went over the midline last Friday, and here we are pulling right back off of that resistance. So if at any stage we close under 7,700, I will get back in short mode. But in the meantime, we are holding up and holding up. Okay. So where am I looking to short this Ftse? I'm looking at the top of this channel, because the top of this channel at 79.60, and of course the big 8,000 would be a great place to, so if we can penetrate into, we can run into that trend line and or top of the channel and close lower, then I will start to short again. Alternatively, if we don't get up there and start closing underneath this 7,700, I'll start shorting at that stage. But in the meantime, I'm backing off. We've had a huge third three-way move up into end of November, reasonable pullback in December, and now we are continuing, still holding up. So all the time that sits up, I will leave it. You can see, to my way of thinking of that MACD, this MACD is looking vulnerable. And the fact we're up here and not over the midline on the histogram is making me think this is not, we could be at the end of this little run. And the volume says, oh, that's not much good, is it? Well, I've messed up my volume, hang on. You can see the volume is, if you look at this 50-day average and this color zone, you can see we're making lower highs in the volume. We had higher highs up here in October. We have had a punch through that in the start of the month, but if that starts to fall off, then that would encourage me to go short even more. Right, so that's the Ftse dollar. So on the back of the Fed last Wednesday and non-farm payroll numbers on Friday, we're seeing a resurgence off of this May 2022 support. So if that is going to, if that gets through 105 here, then that spells trouble for the US indices. The Ftse tends to like a strong dollar because there are so many components of the Ftse that trade in US dollars, trade overseas, and their income comes from overseas. So that's why a strong dollar can favor the Ftse, but damage the US. Right, in the meantime, that resurgence in the dollar has capped the gold, and the gold is falling out the sky somewhat. So I think we could even come all the way down to 1,800 here at the moment. There's a lot of support in there at 1840, 1845. So if we pull back to that area and that holds, then that is one to watch out for. It's all in the tea leaves, because you can see how up here on the 26th of January, the MACD, the averages started to cross and the volumes were not sustained up there. So it's hardly surprising that that has pulled back. This journey could be over. This journey in the gold could be over. If we get another squirt up here with a lower high and that sells as well, then I think we can get a much deeper pullback in this gold. In the meantime, it's a strong, it's been on a strong trend high. So the pullbacks, we're just coming into the low of the channel now. So yeah, if we start closing higher here, I would happily get back in on this pullback, but at the moment, the jury is out. And oil, all we've done in the oil is got close to last year's lows. Last year's lows was 70.40, and we're 400 pips above that at the moment. So if that, if we can start to hold here in the oil, then I think we could see high numbers. I think the path, at least if we break today's lows, we're going to test 70, and if 70 doesn't hold, then we're coming straight down. I think we're going to hit 65, 70. That's 65, 70 would be December 21 lows. There's a lot of red on the charts. The MACD has turned over. So it could be that, yeah, there is a lot of talk of the oil just not holding here and having a deeper pullback. I am trading it intraday on the long side. I got 70 pips on it on the London session, a very small stop out in the US session. So I'd just give them a little bit of profit back, but I'm just backing off of that. So all the time oil is just here. I think at the moment the highs could sell. I think that what would be really ideal for me is for that to actually drop back under the 70 and then pop back over 70. That would be ideal for me. So that would mean we've got a potential 500 pip drop here before the buyers come back in, if the buyers are going to come back in, and then I'll see that going up. Volatility index is getting to, it's seeing some buyers down here. This is tradable. You know, there are guys out there who do trade this volatility index. So if I update this, if that stays above that structure, I think we could make a dash for 25, which would suggest that this market is at the very least going to pull back further. So it's only the start of the week. It's a fairly quiet week. We've got the Fed and the jobs out of the way. The rate rise was smaller than 50 basis points that we were thinking of in recent weeks. So all across the board interest rate, with the exception of the UK, interest rate rises have been coming in smaller. So if the rate cycle does calm down, as long as things like this volatility index doesn't go crazy, then there is the prospect of markets sitting up higher. Okay, let me just check that I am still in this S&P. Yes, I am. It's still early days. I'm not far off my entry point in this S&P. Yeah, I think we can still push up in that one. Right, okay, so let's have a quick look at the stocks. I think this that was a very, very big move on Thursday on the BT, right back into January support. I think we could easily see 124 again. I just think this is a good. There's not many stocks I'd buy and hold. I have in the past bought this and held it for weeks and months. I think BT is a good one to do that. The other one, QQ, is proving to be very choppy. Had a good week last week and then it's pulled right back. I was suggesting this stock could hold these lows. Well, we've already had a push into 374, and we just saw a lot of profit taking on that. So very much more volatile than it has been in the past. I think it's worth hanging on to. I think this is a good stock. It looks as if we can see 335 again. If we hold 330, I'll pinch this back. If we hold 335 on volume, and then later on close above this 350 mark, I think we'll see £4 or £5 this year. I think that's a bull flag. We did this back in June last year. In fact, we're at the same. We've got the same price pattern at the moment as potentially as June last year. That closed higher on the 24th, 25th of June and went on a little run. If we do the same here again, I think QQ can pick up and do well. Right. I do like Pfizer. I'm getting ready to bid on Pfizer at 42.70 now, with a stop under 41.85. The MACD is not divergent, which does actually put me off some, but hey, we've had a good push up here on the 31st. That was earnings, wasn't it? I think that was earnings. I'll double check. So I want that to fall back into the earnings pattern, because if we did this on the 21st of October, so I'm looking for this to hold, fall back in that support and then run. Well, I say run, I mean start to move out and back up to 58.60 plus. I think we could potentially finish the year on 62, potentially close to 70, if it gets a good wind underneath it and the volume picks up. Okay, another one I mean, which I've not talked about, but I mean this. This is a Japanese fund of mid caps. May well. It's got a problem up here at this 8 mark. It's a Bailey Gifford Japanese fund. Right, the other one I'm going to leave you with is let me just check this is the right one. Yeah. Let me just find it. Bear with me for one moment. So I'll do one quick check while I've got you here. Just want to run my eyes over the numbers on this one before I go ahead and suggest it. I have already done this, but I want to remind myself what they look like. I'll tell you what this company does. Manufactures and supplies power products and cables in US, Europe and Asia. It's not a massive company, it's only worth 400 mil sterling. It's got a good balance sheet. Sales growth and profitability is good. I think this is, what's its earnings ratio? Good question. Is it a fund or investment trust? I've forgotten. I've actually forgotten because I I did all the homework on it a while back. I'll tell you what it is in a minute. Let me just finish looking at this one. I know what it's going to do. So price earnings is just over 11. And the volume, see this volume pick up here on the 2nd. I think if that, it's a steady eddy. It's not, I'm not expecting us to race ahead. It wasn't that long ago. November 21, we're up here close to £5. Let me just look at the 2022 range. That is the 22 range. Yeah, so we're holding the ambush zone. If we, I think this is this 250, 255 is viable with a stop under here at 240. But we've got to close. The safer way to trade this is to back off and see if we can close above 260. But all the time we're sitting inside this February 1st range. As long as we don't come out of that and close underneath it, as long as that holds, I think this can start to climb back to 320. I think the year's target on this will be £4. We're 255. If I'm right, and this can climb up here, this may be able to achieve 350, £4. Okay, let me just look at the, right, so on in the trading room, this is the new service. So it's going to be a regular 20-minute midday catch-up. I'm going to be, as the service unfolds, I'll reveal my trade plan. I'll reveal the sectors that I am scanning and forming detailed reports on, as well as entering. And then this Monday session will become much more extensive on the premium, on the paid for session, and it will go into the sectors, particularly tech and healthcare. I'm avoiding energy at the moment and beginning to engage in techs. Very tentative as early part of the year. I think I'm expecting a lot of volatility ahead. And so one of the reasons why I was hedging, shorting Ftse last week is because I am wanting to have hedge positions. I do things like trade indices and the oil to hedge my longs in stocks. So one of the reasons why I day trade is to hedge my investments. All right, that's the end of the free session. The free session in the future will become shorter. I'm just trying to give you an insight into what's going to be on the paid side. But stocks like this, steady eddies, defensive stocks, are the name of the game for me at the moment. And I'm avoiding anything to do with the consumer at the moment, although UK retail has had a lift. We've seen things like ASOS and the supermarkets and so on do pretty well. Let's have a look at ABF. Wow. Let's have a look at a couple of US stocks I like as well. Right, let's pull over to the So we've seen a lot of, yeah, so look, things like this, it's just things like basic things like Uber. I've come off this $24 and that's going to get close to 35. I like good brands. I like good balance sheets. And with the environment we're in, I'm less inclined or avoiding more speculative stuff. Hence the reason why I'm focused on things like Pfizer and chip producers. I think this is a good, things like MU. I think a pullback in MU. So we're struggling with this 63 on MU. But if we pull back, this is the kind of thing I'm going to be looking at. If MU pulls back into that support, into this 55, 56 area, I'm going to buy that and see if we can trade this back up. But all the time, it's swing trades. I'm not buying and sitting in these things. I'm just looking for swing trades. This is not an environment to buy and hold. I will be talking about ETFs. That reminds me, let's have a look at, well, let's stay on the US sector for now. So we've seen Uber pick up. We've got, what's Roku doing? Roku's seen a lot of volume off that. Wow, that's had a very significant push up. There is a lot of FOMO going on at the moment, fear of missing out. People got so shell shocked last year. A lot of money has missed out on this uptick. What was I going to show you? I know. Bear with me 1 second. Yeah, I mean, I think the obvious one to look at is Goldman's. You know, recently in Goldman's, we've seen a trend line dip down there at 33,300, and that's just about to penetrate 37. So good quality stocks with good balance sheets, good prospects is the name of the game for me. What else am I going to show you? Let's have a look at Microsoft. Yeah, I mean, even Microsoft has been on a run. So if that comes back into, I think I'm hoping we're going to see the market take a breather here as we get in the back of, as we get into February. Come up against the anniversary of the war, etc. So if these markets pull back, I'm buying. Right. So I will leave you with some information and then I'm off. Just about to find you a link. Right, so this is what I am up to. That's the premium service now, and I'll leave it there. Thanks very much, guys. I'll drop you a line about that Japanese fund. But I just think the Japanese are outside of a lot of the noise that's going on. And therefore, I think the Japanese market it's got its issues like everything else, but I do think it is a good option. Thanks, guys. See you soon. Bye.